Hi, this is Zach Meir from Master Investor with a look at some bulletin board hero stocks on Friday, the 6th of March, and it's a bumper edition starting off with APR Energy, where there has been a decent breakout from this cup and handle reversal here, which came in from December. The top of this resistance, really the big breakout, 324, and yesterday a very impressive day with the low of the day 342 and the close at the high of 400 pence. It looks as though there's still more mileage here, especially while we remain above the initial or the late February resistance at 354. Target here could be as high as the top of this August price channel towards £6.50. Initially, we got resistance at the 200-day moving average shown there in black at £4.36. And at the moment, any weakness towards the 10-day average, 331, would be regarded as a buying opportunity. Next up is EMED, which is not quite as on fire as APR Energy, but does look as though there's the start of a recovery in place here. We've had a double rebound off the floor of this falling June price channel, and we're just breaking through the 20-day average. Stop loss on the buy argument or the recovery argument at this stage. The 10-day moving average at 3.83. And the initial target, the 50-day line, 4.62, which blocked progress in January. Ideal scenario is that we don't break back below the 10-day line and hit the top of the channel here at 6 pence over the next couple of months. RSI window shows this break through recent peaks towards the 50 level there, which is encouraging. Hurricane Energy obviously smashed over the course of the autumn with the oil price, but we've got the first indication of a recovery here in terms of the break above the 50-day moving average at 15.69. We see this time and again with these bulletin board hero stocks, extended period below the 50-day line, and then the first couple of days above it signals a turnaround, or at least an intermediate turnaround. The ideal scenario here is that while the 50-day line holds, we could hit the top of this November price channel as high as 25 pence over the next month or so. So a reasonable risk reward trade on that, even if this doesn't quite get back to the solid form that we saw before the summer. Roxi Petroleum, another former favorite, which fell on hard times. Decent charting here earlier in the year where we had 20 and 25 pence targets hit rather easily. What is interesting at the moment is that we've got this rising 200-day moving average, the feature shown here in black, 11.5 pence, and we just seem to be starting to break above that. We already broke above the blue 50-day moving average at the beginning of February, which was a positive, and since then support has been coming in above the 50-day line, which is encouraging, as is this rising RSI support line from December as well, running just below 50. RSI at 57 is good too, in terms of being the sign that the momentum is gathering, and all we really need now is a weekly close above the 200-day moving average to sort of cement the idea that a new bullish phase is coming in. Target initially would be back up to 18 pence. If you're cautious on the shares, maybe you'd wait for a break back above the gap here, which was 12.5 pence from November, but that should be the case, that the 200-day moving average break does the job for the bulls here at Roxi on this occasion. Redhall recovery situation as well. Nice action here in terms of this final bear trap for February below the 10 pence level. Then we've got the recovery and a bull flag above the 50-day moving average at 11.4 pence. And really, while we hold above that, one would be looking for a decent revival here, sort of a U-shaped revival. Initial target probably towards, obviously the obvious target there is the 200-day moving average at 17 pence, but rather more on offer after that, with the bottom of this July gap at 25 pence. So really, at the moment, looks like we've breaking neckline resistance, or broken it, and above the 50-day moving average, Redhall, a recovery play. Finishing off with a stock that I haven't looked at for quite a while now, and that's Vislink. Here we've got classic formation here, this bull flag above the 200-day moving average. That's at 43 pence, shown in black. Looks as though we've got the 50 and the 200-day lines building for a golden cross buy signal. We've had the rebound off the 50 RSI zone as well, and an unfilled gap to the upside through 47 pence, the old February resistance. So literally almost all the positive technicals and charting configurations you can think of there. Likely target here while we hold above this gap, and we hold above, let's say 47 pence, is the top of this rising trend channel from March last year, heading towards 70 over the next couple of months. So that looks like it really could kick in quite well for the bulls over the near term. That's it from me. More updates at spreadbetmagazine.com.